The SEC just dropped a bomb on the crypto markets, and it's not just about Bitcoin anymore. Two major ETF applications just got pushed back to October, sending PENGU crashing 11% and leaving Cardano investors questioning everything. But while retail panics, something massive is happening behind the scenes with ADA that could change everything. Stay tuned, because the data I'm about to show you reveals why this delay might actually be the best thing that could happen to these altcoins. Alright everyone, we need to address what happened on August 25th because this is bigger than most people realize. The Securities and Exchange Commission just delayed two critical ETF decisions that could reshape the entire altcoin landscape. First up, Canary Capital's PENGU ETF. This wasn't just any ordinary crypto ETF application. We're talking about a hybrid structure combining Pudgy Penguins memecoin tokens with actual Pudgy Penguins NFTs. The original deadline was August 28th, but the SEC pushed it all the way to October 12, 2025. Then we have Grayscale's Cardano ETF, arguably more significant for the broader market. This application aimed to convert their existing ADA trust into a spot ETF, with the deadline moving from August 27th to October 26th, 2025. Now, the SEC's official statement was pretty standard regulatory speak about needing a longer period within which to take action, and citing concerns about investor protection, valuation, and compliance. But reading between the lines, this tells us something crucial about where we are in the crypto ETF approval cycle. The market's immediate reaction was brutal and predictable. PENGU dropped 11% within hours of the announcement. But before you write this off as just another regulatory setback, we need to examine what's happening underneath the surface because institutional behavior is telling a completely different story. This delay strategy isn't random, it's part of a calculated regulatory approach that we've seen before with Bitcoin and Ethereum ETFs. The SEC is essentially buying time to establish comprehensive frameworks for altcoin ETFs, and October 2025 is shaping up to be a pivotal month for the entire crypto ecosystem. Think about the timing. We're not just talking about PENGU and Cardano here. The regulator has been pushing back decisions on XRP ETFs, Dogecoin ETFs, and several other altcoin applications. This synchronized delay pattern suggests they're preparing for a coordinated release of multiple decisions simultaneously. But here's where it gets interesting from a market psychology perspective. While retail investors are interpreting these delays as bearish signals, institutional players appear to be positioning for the opposite outcome. The PENGU situation is particularly fascinating because it represents the first attempt to create a hybrid crypto NFT ETF structure. The regulatory scrutiny makes sense. We're in uncharted territory here. But the fact that Canary Capital is willing to wait almost 14 months for approval tells us they're confident about the eventual outcome. For Cardano, this delay actually aligns with some positive technical developments we're seeing in the price action and on-chain metrics. While the SEC deliberates, ADA holders are making moves that suggest growing confidence in the network's long-term prospects. And this brings us to the most important part of today's analysis, the data that mainstream media is completely missing. Over the past 7 days, more than $170 million worth of Cardano has been withdrawn from major centralized exchanges including Binance, Coinbase, and Upbit. Over the past 7 days, more than $170 million worth of Cardano has been withdrawn from major centralized exchanges including Binance, Coinbase, and Upbit. This isn't random retail behavior, this is coordinated institutional and whale activity. When we see large-scale cryptocurrency movements off centralized exchanges, it creates several bullish market dynamics. First, reduced exchange supply means lower immediate selling pressure. Second, this indicates long-term holding intentions rather than short-term trading activity. The ADA community's shift toward self-custody reflects broader institutional adoption of crypto security best practices. Multiple technical analysts are converging on bullish scenarios for Cardano that align perfectly with these on-chain fundamentals. Now, connecting this technical setup with the October ETF decision timeline creates a perfect storm scenario. If the SEC approves the Grayscale Cardano ETF in October, we could see ADA breaking through that $1 resistance level and targeting the higher Fibonacci levels. Crypto analyst DZ identified ADA trading within a rising channel pattern that's been intact since late 2022, with the monthly chart showing incredibly bullish characteristics. The channel structure places current support near 60 cents, resistance around $1.30, and a midline at approximately 95 cents. But the real target that has analysts excited is the channel top projection at $2.50. But the real target that has analysts excited is the channel top projection at $2.50. TapTools provided additional confirmation through Elliott Wave analysis, suggesting Cardano has completed its accumulation phase and is entering a new expansion cycle. Their wave count identifies a base near 52 cents, with the first major resistance target at $2.05, 1.0 Fibonacci level, and potential continuation toward $2.50, 1.6 Fib level. More Crypto Online reinforced this bullish outlook, noting that ADA remains positioned for significant gains as long as it holds above 51 cents. They've identified a critical breakout level near $1, with subsequent targets at $1.47, $1.79, and $2.47. Now, connecting this technical setup with the October ETF decision timeline creates a perfect storm scenario. If the SEC approves the grayscale Cardano ETF in October, we could see ADA breaking through that $1 resistance level and targeting the higher Fibonacci levels. This positioning makes sense from a risk-reward perspective. Even if the ETF gets rejected, ADA's technical structure suggests limited downside below 51 cents. But if approval comes through, the combination of reduced supply and institutional demand could drive prices toward those $2.00 plus targets. While Cardano has established fundamentals and technical patterns, PENGU represents a different type of opportunity. The hybrid NFT-token ETF structure is unprecedented, and approval would essentially legitimize an entirely new asset class for institutional investment. The 11% price drop following the delay announcement created a potential entry point for risk-tolerant investors betting on regulatory approval. The October timeline gives the pudgy penguins ecosystem additional time to demonstrate utility and sustainability. These ETF delays are occurring during a broader crypto market consolidation phase. Bitcoin's dominance has been stabilizing, and altcoin season indicators suggest we're approaching a potential rotation into alternative cryptocurrencies. If multiple ETFs receive approval simultaneously, it could trigger significant capital flows into previously restricted institutional products. The SEC's decision to delay both the PENGU and Cardano ETF applications until October isn't the bearish development that surface-level analysis suggests. Instead, it represents a strategic regulatory approach designed to create comprehensive frameworks for altcoin ETF approval. While retail investors react emotionally to short-term price movements, institutional players are accumulating positions and reducing market supply ahead of potential catalysts. The $170 million Cardano exchange outflow represents the largest coordinated positioning we've seen in months. Technical analysis confirms that both assets are setting up for potential breakouts, with Cardano showing particularly strong confluence between on-chain metrics and chart patterns. The rising channel structure, Elliott Wave completion, and Fibonacci targets all point towards significant upside potential if regulatory approval materializes. For investors considering positions in either ADA or PENGU, the current market presents a classic uncertainty discount opportunity. Risk management remains crucial, with clear invalidation levels identified in the technical analysis. The crypto market is evolving from a retail-dominated speculation vehicle into an institutional asset class. ETF approvals represent critical infrastructure development for this transition, and the October timeline provides a clear catalyst framework for positioning decisions. Remember to conduct your own research, consider your risk tolerance, and never invest more than you can afford to lose. The cryptocurrency market remains highly volatile, and regulatory outcomes can never be guaranteed. Crypto disclaimer: this content is for educational and entertainment purposes only, and should not be considered financial advice.